Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, well-noticed post covering finance and property news. It's Monday again, and Edwin is back for another rant. Edwin, nice to see you. Well, it's a lovely quiet week, nothing happening at all, really. You know, we could almost not have a show this week, huh?
No, it's a cat's life, mate. It's a cat's life. You can just curl up somewhere in a warm little corner and just go to sleep because there's nothing happening. My God,
There we go. Here's an
it's a
example.
bloody.
I think the dogs have the right idea. Let's just relax and everything's fine. I've had my food, I've had my walk, I'm in a nice warm bed, and I'll just stay here for the next few hours and then I'll get up for my next meal. I think they have a good life, Edwin. I think we've made a mistake. I think we should be a dog.
All cats and sleep for 18 hours a day.
Yeah, good,
It's
good point.
crazy.
But meantime, in the real world, of course, we have all of the machinations of the trade situation, plus the Middle East, Iran, and all of the stupidity. We're almost wherever you look, you know, you got to say things are looking pretty uncomfortable at the moment. I made a show called Brace Markets Caught in a Volatility Trap. And of course, we've had the very high bond rate. So in Australia, the 10-year bond rate is now knocking on 5%. That's a significant indicator of forward interest rates. Prices, of course, of oil futures very, very high now. This is the Brent, up well over 100. And people are now drawing parallels between what's happening now and what happened back in 2022 in terms of the WTI trajectory. And, you know, it's probably going to get worse. So who knows? And, you know, I guess this is a property show, but some of those other broader international issues will have a knock-on effect. But I think we should probably, you know, hold to our to our rant, saying, well, actually, of course, the hot news is da 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 da.
Yeah, well, that's it. Like it's the yeah we were calling it. We were saying earlier on what could happen. A destabilized geopolitical scene, and then you've got the high end picking up steam. On my Tom's talking about a property that was bought in 2014 for 3.4 million, and now it's going to go back on the market at 75 after I don't know how much they spent on it. They spend 10 million, 15, even if they spend 20 million, it's a big ask. But this is what people have got to get a grasp on, Martin, and that is that there is a lot of money out there, and as Tom spells it out in that video, there are a lot of people there, and there are a lot more people that are going to come, and also with this geopolitical tension in the Middle East, and soon to also get a little bit warmer and hotter potentially in the Asia Pacific region. You've got a lot of people that are going eyeing out Australia, which is what we've been saying for a while, and I put that out in the post because of in earlier this year. 1st or 2nd of January this year, and that was the Asia Pacific instability will accelerate capital repatriation. So this is what we have, Martin.
Absolutely. Well, let's just recall your prediction 10. So this was what you said at the start of the year. Escalating geopolitical risk fuels fear, triggering expat wealth returning home, Australian PR holders moving capital back to Australia, and safety first buying decisions. Yep, we said last week this is going to have a significant impact at the top end of the market. And as I showed a little while ago, of course, other people are now talking about, well, maybe Dubai isn't as great as we thought. And some of Asia's richest families are perhaps considering other places to go to. And as you said, your number 5 observation, start of the year, prestige markets rebound. Sydney, capital hasn't vanished. It's cautious. Once certainty returns, top end stock moves quickly, decisively, and discreetly. And all of that is in play. I've had a couple of conversations this week with people who have significant assets, and they're looking at Australia. And Australia is seen as a relatively safe place for those assets. And within Australia, interestingly, Edwin, it's not Melbourne, it's Sydney. Sydney that keeps coming up in those conversations.
Yeah, 100%, man. This is where a lot of people are going to have to really put the skates on, sharpen the blades if they're on ice skates, or put a bit of oil in the wheels, whatever they're going to roll on. They got to start getting moving because, look. I was talking to one of my old mates that operates as a buyer's agent in Brisbane. So has operated there for about 35, 37 years, and his name's Paul. And we were talking, and he's telling me now that, like, investment properties in Brisbane, you know, are around about and a bit higher now than the $1 million. I mean, I recall when we were buying, myself and my family, we were buying investment properties in Brisbane. We were buying them at $165,000. And now the same properties that we were buying for 165,000, they're currently on the market at around 450, 460, and they're absolutely dilapidated, woeful. So the properties that people are buying, are a million. Now, if investors, and God forbid that the first home buyers in the Sydney market, in the Sydney region and the outskirts of the Sydney region, uh, are the ones that are going to suffer the biggest impact. Why? Because if the investors that are, like Paul was saying, you're upwards a little bit up above the million to buy an investment property in Brisbane, and this is for his own words. Why would you, when the only thing that you got going for it is negatively gearing it, and in the first year you're $100,000 in the hole, right? And you're hoping and praying that the market's going to pick up speed on the second year, third year, fourth year, so that you can then get your money back by way of capital growth. Yes, you've got a $30,000 taxable concession along the way, but that's really not going to not cover the all round costs. Now, so if the investors then focus back into the market, the outer regions of the fringes and beyond the fringes of the Sydney region. Look, you got markets right up to Katoomba, Lithgow. They're absolutely going to go ballistic. Potentially, they're going to go up 20, 30, 40%, which is, again, one of my predictions from last year, from early this year as well. So this is what's at play. The worst thing that could happen right now, Martin, for first-time buyers, downsizers, for upsizers, even downsizers, for a matter of fact, is if the market, the panic sets in amongst the vendors and properties come off market, right? It's too early to tell, really, really too early to tell. We will get a better bearing on that in about 21 days. And we'll see what, and then you've got obviously the seasonality, winter, where properties generally come off market anyway. But if you end up with market pulling back, so far it's trending upwards. So people that are looking at buying have got a bit more choice in a lot of suburbs, in a lot of areas, especially in the lower priced areas. They've got a bit more choice. But you also got to be careful what you're buying, right? So but the worst for me, the worst scenario, the worst fear for first-time buyers or those wanting to upsize or downsize, wanting to buy, is if we see an attrition of numbers on market in Sydney. I mean, you only have to look at what's happening in the Brisbane region. I mean, there's hardly anything for sale, and it's, you've got 10, 15, 20 buyers in some properties, as Paul was mentioning to me, for the first-time buyers are just fighting tooth and nail to get something there. So I think many were saying that Perth has reached the peak, but potentially Perth could push through that glass ceiling again, like the top tier markets in Sydney. Many markets around Sydney, people are going to be looking for lifestyle, security, safety, education, key elements. What people are going to be looking for, and unfortunately, both sides of the fence have thrown the first-time buyers into under the bus, and that's the unfortunate thing of this narrative.
Yeah, and a couple of observations there. The first is, of course, that the first owner grant thing is still running. So I'm still seeing some first time buyers bringing forward their purchase decision and then finding it very difficult to find anything. And the other observation is that with the expectation now of significantly higher oil prices and probably for quite a long period of time, those people who bought a long way out and are now essentially locked into long-term traveling are beginning to rethink. So I was chatting to somebody the other day who was looking to buy a long way out and then did a calculation on what would happen if oil prices went up to 100 US. And they discovered that they would actually be so out of pocket that they would actually not be able to continue to live in the place that they were about to buy. So they decided to not buy. And that takes me to my observation about what they're not telling you about household spending, right? So there are households who are sitting on significant cash and are ready to buy, but there are a lot of other people who have bought or are thinking of buying. And the story of household spending is actually one of significant increases across the board, actually. And the latest data from the ABS, which I parsed, actually the data was very partial from the ABS. It wasn't the complete picture. They only included a few categories of spend. But actually, if you look at household spending in the round, it's pretty hard for many people, 50, 60% of income in some cases going on to just find somewhere to live. And then I'm going to run a show tomorrow where I'm going to go through my latest household finances and mapping them to show which areas are being most badly impacted, because the pressures are still there and incomes in real terms are still falling. So despite all of the spin from Jim, a lot of people are under some difficulties. So we've got this, again, continued bifurcation between those who actually have capacity, willingness to buy, and those who are actually under the gun. And I think this is going to play out not over weeks, but over months. Oh, and by the way, I did make a show about the truth and lies in the property market because, of course, with the Grand Prix and the 3-day weekends, the clearance numbers rose, but on a much lower volume, as we'll see later. So again, you've got to look through the noise to understand what is really going on. And I think that's a real point, Edwin, that if you really want to sort of get to grips with what's going on, you have to actually understand the local dynamics and all of those things. But I agree with you. In certain areas of Sydney in particular, particularly those areas which are attractive from a lifestyle perspective and are not necessarily first-time buyer honeypots, but more upmarket people perhaps moving up or moving into Australia and buying. A lot of demand there. But there are other areas where the demand seems to be dissipating. And I would highlight that a lot of units are looking a little bit sick at the moment. And again, chatting to a couple of people who bought recently into the unit markets, the first thing they got confronted with within 6 months was a significant strata rise. And that's the thing, of course, that people need to take account of too. So I think we always say go granular, look at local areas, understand the local dynamics, and don't get carried away by the articles who are saying everything's booming. Actually, it's a mixture, right? Which makes it complicated because you have to really do the work.
Yeah. It complicates a lot of things and complicates a lot. Look, in a lot of the decisions that people are making, as we've said for many times, and that is that the jumping in with emotion. A lot of people sell with emotion, emotionally charged as well, unfortunately, and that's why they get hoodwinked by the selling agents as well, and end up with less in their pocket than what they should have really got. So it's, as I said before, Martin, I would hate for the numbers to drop because of uncertainty, but that usually that to me is a 70% chance that it could happen, because that's the natural reaction that people have. We're moving into winter, and the other thing is that there's a window there. There's a window that I can see before people obviously from these part that are affected, people of wealth, of money that have parked their money over abroad. These are people that have already taken money out of China, right? And other people from other parts of the world that have tried to park the money in UAE, in tax havens, whatever, for whatever reason. So now with these piles of money, and they're going to start looking at Australia. It's going to be at least 3 to 6 months because they've still got to sell the assets. Even for expats to come back from Dubai, UAE, and all these places, if they spent money there and they bought there and invested there, well, first of all, they've got to sell. They've got to reclaim their money, and are they going to get what they put in? Could doubtful. And then they've got to decide also where they're going to when they land, where they're going to where they're going to stay. Now we know it's going to be more likely it'll be in your Queenslands, your Gold Coast, your Sydneys, your eastern suburbs, or your North Shores. I don't think Melbourne has much of an appetite, for these people at the moment. But this is how things are going to play out, and it's really going to be very, uh, um, moving forward. People are going to have to really decide: do they wait also, or do they move in? I'm going to tell you what I told um, my daughter, and that is what I said to my daughter was, I said, right now you've got a lot of choice, and you've got a lot of choice coming on in the markets that she wants to look in with her husband. So we're going to take the opportunity and the advantage now and play on the emotion that's playing out, with the selling agents, and get a further reduction on what they would have otherwise told the vendors that they would get, because of the numbers have swelled in those particular areas. They've gone up by about 15% over the last month and a half. And potentially, if there's another rise of listings in that area, another 10%, that's even going to be, we're going to create more of a broader story as to why they need to drop their prices as well. Because if you can buy with certainty now at a discount with an upside. But if you're going to wait until until the markets change, and it could have a reverse effect if we do end up with a lot, which I'm saying we will, but if we do end up with a lot of these monies coming from abroad, and investors start refocusing on Sydney, it's going to say you're not going to have a chance after the middle of the year to get into with the kind of money that you have right now. So obviously, there's a lot more that goes into that conversation, but in general terms, that is what could happen. But again, it's not financial advice for our followers and our viewers. It's just an observation. And for me and our team across the board with all our clients, comes back to numbers, Martin. Comes back to that black and white, the numbers, because numbers tell us the story, and they tell us the story live. Rather than, it's not a retrospective view of what's going to happen. It's in a way, it's a forward view of how we could play that game. Apart from everything else that or the arsenal that we've got, up our sleeves when we go in and negotiate for our clients.
Yes, and I agree with you. The numbers are important, and we have to underscore, I think, Edwin, that numbers can lie unless you understand context, right? Context is everything. And just to give you an example of that, this was an article that came out. Investors piling into the property market at greater rates than first home buyers, and they quoted the lending to investors. It's the highest in more than 5 years. And investors had a 39.7% share of housing finance commitments, worth $43 billion in the December quarter, according to the ABS data. And investors took out a record 60,445 loans. Now, that is a piece of data that tells you something, but it doesn't tell you everything, right? And it's important to understand that at the same time, first home buyers were being given the 5% option. And, the first home loan deposit scheme was actually there as well. So there are a bunch of different incentives for first-time buyers. And so you need to read the statistics in the context of what else is going on, in the context of those broader issues with regard to confidence, as well as government policy and all of those things. Now, when you start doing that, you might actually conclude something a little bit different from just taking the raw numbers. And I think it's really, really important that people actually, understand context. Another example, you may have seen this headline about Glebe, right? So Glebe and the area around Glebe is now looking for a once in a century redevelopment at Glebe Island on Sydney Harbour. And of course, there's a big debate about it, bearing in mind that Mims had said his government would be looking for a 30% of social and affordable housing in a lot of the projects that they're actually wanting to run. Well, actually, this one is 10%, I think, it is perhaps what they're talking about. And so there's a lot of debate about it. But again, they're talking about a lot of properties here of 2, 3, 4 million. So it is not simply a matter of grabbing the headline and saying, oh, they're going to build in Glebe, right? You've got to actually understand a bit more about it. And again, this one here, developers upsizing redraws the skyline. So actually, they are looking to change the skyline, change the local situation, build in some areas. A lot of areas are going to change dramatically. So when you're thinking of buying, not only think about what it's like now, ask yourself the question, what is it like 2 years, 5 years, 10 years down the line? Because in a lot of areas, particularly in and around Sydney now, as well as Melbourne, the skyline is going to change. So again, it's more important than just grabbing a headline. You've got to actually think about this in more detail.
So you've got that Bays West development that they're proposing, and it's absolutely, when you read into it, again, like you said, I like to read between the lines. It's you probably before anybody gets the key, it's going to be 7 to 10 years. And so,
If
so
if if they can find the builders, and
yes, that
if
was going to be my next
yeah,
point.
if they can find any way of getting the materials from China down to Australia, assuming that there's petrol and whatever, or ship fuel oil, it depends. It depends. It depends. But my point is, Edwin, that with all of these things, again, people get swept up. They get swept up in the headline. They get swept up in the the one line statement. It's really important to think it through.
Yeah, and this is why we differentiate a lot between between the categories of properties. Yeah, you've got your freestanding homes, you've got your duplexes, you've got your villas, you've got your townhouses, you've got your old apartment, 3-story walk-ups, 2-story walk-ups, medium density, developments from the 80s, from the 90s, and try to differentiate, and weave that pattern through that to enable to help our clients navigate through decisions that they have to make, short term, medium term, long term. But at the end of the day, Martin, overall, in general terms, we're not building. We're not really building. We're talking a lot. We're talking 8,500 properties allegedly in in the Bays West area, or whatever they're going to call it. Never West, Never Bay, Never Neverland, whatever they want to call it. 8,500 properties they're proposing. When are they going to get built? So then 8,500 dwellings. And as I put out in the post on X, to talk about tonight as well, and that is my math so far tells me that a one-bedroom apartment is going to go off the plan for $1.8 million. How many first-time buyers have got $1.8 million to buy, and let alone wait off the plan to get the keys in 7 years' time? One bedroom, a one-bedroom apartment. So you've got all these grandiose plans. You've got all these no different to Victoria, but as I've also tagged you on one of the posts on X, is with all these notions, one thing that comes along with it is taxes, taxes, taxes. Right, so you've got all these notions of building this, building that, and the landholders and everybody else is going to pay through the nose in taxes before things even get delivered. And this is even scarier when you got this sort of policy, when you got this ad hoc policy, ad hoc proposed developments, ad hoc um, uh, you know, regs and legislation and everything else. And at the end of the day, the ones that are going to be feeding the beast are the ones that are, the working class, the middle class, are just getting absolutely hammered with every other cost. So, like last week and the week before, we were speaking about the upside of the St Mary's and how you were doing deep dives in the St Mary's areas with land values. Now we've got the upside of the ring around Melbourne with the metro there, and now the upside is that yes. The landowners are going to get a huge upside, a big upside in the value of land. But hey, it comes at a cost. It comes with a tax. It comes with a tax. Now, obviously, uh, with all trying to bring a little bit more clarity, there are exemptions to that tax. There are there are you can opt. Yeah, you can opt to pay a tax within. You get up to 30 years to pay it, unless there's an option or unless a sale happens. In other words, if you're a landowner, let's say your property is worth $2 million, a developer wants it because of the upside that the government has now granted it, because now you can put 50 dwellings on it. Now your property is now worth, the land value of your property is now worth, let's say, for example, $4 million. So now, let's say on that upside, you as a landowner, you've got 30 years to pay, up to 30 years to pay that tax. Seems like a very long time, but it's not. So you got to think of doing something. But when you sell that property, so when you sell that property or a developer buys it, now define the term buy. A purchase of that land could be under an option, which the option could take up to 5 years. But as soon as the property is bought, guess what, Martin? That tax theoretically kicks in. So, whatever the tax is on the upside, whether it's 50%, whether it's 30%, you got to stump that up, up front as when the sale is triggered, and the sale can be triggered in many different ways. Therefore, what does that do? It makes developers or landowners, the smart ones, are going to say, "Hold on a minute, Mr. Developer or Mr. and Mrs. Developer, you want to buy my land? I'm going to be out for $1 million in tax here, so I want that, well, along with the option." Now, what developer has got a 5% deposit? Options are usually 5% of the value of the land that you agree on, right? So on that, you got to stump up another 30% on the value of the land. I mean, they've got rocks in their heads. So this is where they've created a they've created a, what do you call it, an impasse for developers to move forward, and for landowners to sell and move out, and allow that land to be redeveloped into multiple dwellings, which would be the ideal. So really, I don't know, Martin. I don't know what you think, but that's my research so far. That's my research to date of how this is going to work. And as much as people are jumping up and down on social media saying, "Oh, yeah, this is in now," blah blah, it's not. There are exemptions or things that are going to be applied, but in general terms, the critical point here is that no developer is going to want to go forward with it, because it takes them 3 to 5 years. Could take them anywhere from 3 to 5 years to get the development approval before they start digging, putting shovel to the ground, as I say. So in that, they're not going to release the cash flow. That's their cash flow. So what does that do? Again, it cripples construction.
Yeah, actually, they should be measuring not approvals, because there's a big stack of approvals which aren't being moved forward at the moment, they should actually be measuring delivered homes with the key ready to go, right? That would actually be a much better way of doing it. But of course, that would be a much more adverse story than, hey, we got approvals. Well, actually, approvals are still going down. I'll also make the point, Edwin, that, look at Canada, right? So there's a parallel here insofar as you said, Canada and Australia are on the same trajectory when it comes to housing supply. And the solution, according to all the governments at all levels, more taxes, more taxes. Canada's home builders are going bankrupt. It's precisely the same problem. And it's like the state government and federal government really have no idea about what they're doing.
No, and this is and this is why I say that the aspiring homeowners are really getting thrown under the bus, and young families, and even downsizers. I mean, anybody who wants to buy a freestanding home, that great Australian dream is dead and buried. 2 weeks ago, I went toe to toe with two builders for a property in the West. And I went toe to toe with builders. Now, these were builders. When I was talking to the agent about them, that they were upfront with who they were and what they were doing. And I said these were builders that once upon a time were building townhouses, and they know them well because over the decades I got to know them, and obviously they've on-sold the projects and that, and they also got an opportunity to look at a property that was genuinely off market. Apart from the three of us, that we had our own little mini auction before the property was even advertised. The interesting thing about that, Martin, was the fact that these were builders, right? That were once upon a time building on average 10 to 15, as an average figure, 10 to 15 townhouses a year. And now what they're doing is basically buying to renovate, reconfigure the property, and do with not much fuss, and spruce it up and put it back on the market for sale. When you've got developers, when you've got small time and big time developers and builders doing that across all categories or price points, you know that the market is really undersupplied with what people want the most, and that is freestanding homes. Now, so what I'm trying to get at is why are they doing this? Why? Because obviously, I talk a lot to a lot of different people and builders and developers alike, and it all comes back to they just feel safer. Yeah, there's the elusive pile of cash at the end of a big development, but it's a long time in between drinks to do a medium density development now. And unless you've got deep pockets, and unless you've got cash on hand, unless you're really cashed up, and you're not relying on the banks as much as what you would otherwise, developers do, you got no chance, other than developing into high net worth areas, which then means that what we're putting back, what's being developed, is really going back to the beginning of the show, is nowhere near what first home buyers are wanting or will ever have a chance at buying first cab off the rank.
No, absolutely. And the statistical data is very clear about this. The proportion of properties that are really in that sweet spot for first time buyers is extremely low. It's not rising very fast. And despite all of the government spin about the half and everything else, the truth is that they haven't really increased the supply at all. And in fact, their policies are going in the other direction. And it's not uniformly spread across the country. I said last week, I think Melbourne is a little bit of a laboratory here. I think they're perhaps further down the track than some other places. And I chuckled when you actually came up with the hedonic index virus, known as Get Out of Victoria virus, is wreaking havoc amongst property investors in the fringes of Melbourne region. I have found this again in my one-to-one conversations. The number of conversations I've had with property investors in those outer fringes saying, I can't make it work now. I simply can't make it work because all of these taxes, all of these burdens are on. The returns I can get from letting the property aren't rising sufficiently to cover the costs. And as I've said before, I think, Edwin, the gross and net returns for investment properties in Melbourne are significantly depressed relative to quite a few other parts of the country, and they're getting worse. And so, not surprisingly, Victorians with property are trying to sell, but that means that the listings go up, doesn't it?
Yeah, look, it does. So this goes back to my first prediction for 2026 in the first of January, and that is that Melbourne market will continue to bleed. Expect a further 7 to 10% decline, led by new home states in the outer ring suburbs. What were once the appetite of investors, right? So again, it's all to do with government policy, all to do with issues or social issues that they're facing through, and on and on and on. Social unrest, but these things they haven't finished playing out, Martin. Now, this week, which we'll talk a bit more later on when we look at the numbers. This week, Melbourne broke the 30,000 mark, which last year they didn't break. They got up to about 31,000, if you recall, in around about spring. And then it sort of started tapering back towards the end of the year. But now we haven't even hit winter, and they've already cracked over 31,000 listings on market. And I think that that is really just it wouldn't surprise me now if we get to 35, 37,000 listings on market in spring. The rental market is also decreasing in volumes, so more stress on the tenants. So in my opinion, it's a continuous nosebleed from here on out. So and because as we say, different markets are acting differently because of government policy. Government policy, social unrest, issues. But overall, in general terms, it's government policy. Now, the other side of that coin is when people, investors, and investors start sort of kicking first-hand buyers out of your Western Australian markets, in what we call the one-trick ponies. Again, social unrest, geopolitical unrest. We upset China, and mining screwed. So then all those places out there are going to be where you got all these towns that are banking on that mining growth, are potentially are going to feel a lot of pain, and those markets retreat rapidly, more rapidly than what I've seen. Historically, I mean, those markets go backwards, from literally overnight, and it's scary. And a lot of people get caught out because they bought in on emotion, they bought in on a whim, they bought in on so-called data, that so-called marketers, investors, what we used to call marketers, and now they call themselves buyers agents. They push out reports from the laptop, are pushing out, and they're hoodwinking people into these markets, which create a problem for regional towns, regional areas in those places, and also create a major problem for first-time buyers that live in the area, want to stay in the area, grew up in the area, but now they're being pushed out by investors, wanting to ride that gravy train.
Absolutely. And I'll just overlay this because, of course, the current crisis with regards to the Middle East is already beginning to filter down. So this article said fuel wholesalers have begun rationing petrol and diesel supplies across their Australian networks in the wake of the US-Israeli assault. And it's very much, particularly in some of the regional areas where there are significant pressures. And as I said, prices are already beginning to rise. And now the rationing concerns are there, could face even higher prices and shortages at service stations, particularly in areas perhaps away from the main urban centres. And just on the fallout, by the way, it's worth highlighting that they're talking about air cargo and rising costs. Everything potentially could be quite a lot more expensive, of course, as well. But I think this oil story is a uh, particular thing that's worth thinking about. And inflation set to reach 3-year highs as prices of oil escalate. So, the broader inflationary pressures. And when you overlay those inflationary pressures and when you overlay the specific pressures around fuel availability and overlay that as to where property prices have been very, very strong, I wonder whether this could be the tipping point for some of those areas, particularly in the West. I actually noticed already a little bit of an easing of price growth. And I've noticed a bit of twitchiness amongst some of the people that I've spoken with over there as to what's happening next. They feel that it's all a bit unreal. They've had these very significant price rises, although interestingly, not universally very strong, sometimes pretty strong, particularly, of course, in the standalone environment. So you might have a large house on a very small block, very much cookie cutter, with lots and lots of other similar properties all in the same area, with quite similar types of people all holding them, and now beginning to experience all of this pressurized increase. And that could actually shift the market quite dramatically. And I think that's something to bear in mind. Just because prices have been strong, maybe they won't be as strong. In fact, we'll touch on that tomorrow when I talk about my mapping. I'll show you some of the data, the most recent data from Western Australia, which is, for me, another potential canary in the coal mine.
Look, 100%, man. And this is where, as I shared with you earlier on, we got a number of clients in the Google managers, and they're you know, high-level individuals in Google, and we've helped them out with the property acquisitions over the years, and also with some of the renovation works. And Google are having this major global conference in Macau. Jokingly, I said to the guys before they departed, to the ones that I was able to talk to, I said to them, I think it's their way of telling you that AI is taking your job. So they want to give you, they want to give you the last hurrah, the last trip before they turf you, and and look, I say this jokingly, right? But you look at the demographics of your Box Hills and your cookie cutter areas, like you said, Martin, where homes were built in the in the fringes, and to be more specific, on 280 square meters of land, and they build these homes that are only 90 centimeters apart from the two sides and the rear neighbors, because you got these monstrosities in the middle. And but at the end of the day, they're worth $1.4 million, 1.45 million dollars, and a lot of them are also coming they're coming out of warranty in your Box Hills and in these areas. They're coming out of the warranty period. And a lot of them will start to have significant structural issues after that. Mark my word, it usually happens. But my other observation, and this is just me. Again, look, throw stones at me, do whatever you want. But at the end of the day, the demographics of the population there are in IT. So. Uh, as you said, what do you do when you wake up one morning and you get a text message or a WhatsApp message or whatever message, and you get told by your employer, hey, your job's no longer available. Thank you very much. See you later. So they're the areas where you've got to take caution when you get into these areas. A lot more caution as to what you're going in there, and the sustainability of those price points, because as we say, and I've said all my life, the value is in the land. The building, the structure depreciates, the value, what goes up in value is the land. So when you start looking at those developments, like you're going to map out tomorrow, in those fringe areas where they're upwards of 1.4 million now, and you just walk away thinking, where's the value?
Mm.
Hot boxes, they're not dog boxes, they're hot boxes. And on top of that, who was the bright spark that decided to make all the roofs dark grey? It's well, you're going to be costing you more to insulate the place. That's what's there. I mean, Box Hill is just one comes to mind because I was there a week ago looking at some properties for some clients, and obviously there are other subs. Now, one of the things that's not really talked about a lot, Martin, is the whole Badgerys Creek as well, and all the developments that have happened there, and the crazy money that people are paying. They're close to $2 million, to be on 350 square meters of land again with these monstrosities, and all on the whim that this new international airport that's being built is going to be the ants pants of New South Wales. But to date, I'm yet to see a real proposal as to how they're going to get fuel from Kurnell or the depots to jet fuel to Badgerys Creek. From my understanding is that it's going to take something like 300 plus double bogey tankers on a daily basis to get the same amount of fuel that Kingsford Smith Airport uses on a daily basis. I mean, this is insane. This is the ad hoc development, ad hoc policy, ad hoc proposals that you and I talk, or call it off the cuff stuff that we're being subjected to by different state governments over the decades. In many opinions, many experts' opinions, that airport should have been between Sydney and Newcastle, where you've already got a pipeline going down the coast anyway. But hey, the experts spoke, and the politicians said, "Nah, we'll put it out at Badgerys Creek, and look, keep it on the quiet." But my informers tell me that the fire engineers don't want to sign off on the paperwork because it's still got major issues with the as the planes come down and they offload the excess fuel. It's surrounded by very prone areas that could really catch a light. So people really have to think through when they buy property in any market, in any market across Australia.
Yes, absolutely. And I think the Western Sydney story has not fully been told yet. And you mentioned some areas. I'm going to put that post. I haven't done it yet. I've been too busy. But there is a post coming up where I go into the detail of what I found at St Mary's as an illustration of why it's important to look at the local planning regs and the future expectations of growth and all of those things, because it can completely change your view of a particular area or a particular property. Now, it's worth, I think, just going back in our Wayback Machine here, Edwin, because you actually discovered that some of this stuff that we've been talking about, things like building and how dense and construction issues and even the quality of construction. You may think this is a contemporary issue, but your Wayback Machine has come up with a story from some time ago.
So we're doing a renovation we're assisting one of our clients that we helped them buy a property in Darling Point, and now we're assisting them with the renovation and in the demolition of the kitchen. This was behind one of the old cupboards. It's newspaper from back from 1998. And as I was flicking through the paper there, the videos there, a short video put up on X for our followers and viewers that can watch it. The 3 points that stood out flicking through the pages. Yeah, they're talking about rents. They're obviously, it was late 1998. We were talking, getting closer to the Olympics, and obviously rentals were an issue. And you could say back then we really did have an undersupply of property, and everyone was going hell for leather trying to accommodate all these tourists from all over the world in short-term accommodation. So that was one of the issues. Somebody paying $1 million for Harborside apartment or something for 2 weeks. It was, a crazy thing. But one of the other points that were raised, or that was that one of the other stories there was, vendors' expectations. They talk about a property there at, and they got offered 2.95 or something. The story went along the lines that it didn't meet the vendor's expectations. So vendors' expectations were high, like a lot of vendors' expectations are currently high. They were dealing with that. And the other story there, as you said, was to do with building issues. But the point that I make there is the terraces. It's funny how there's actually stories about the terraces there in the eastern suburbs, in the west areas, of how a lot of them are riddled with rising damp and falling damp as well. And there's a story in that in the paper there in the Herald about it. But as I point out in the little video, as I said, well, at least in 1998. That were publishing the issues that these services had, but now move forward now to 2020, 2026, and those dodgy selling agents are trying to tell you, hey, these services have got no issues. What rising damp? Look, it is what it is, right? Property is one of the main talking points in the Australian social sphere.
It has been for as long as I can remember. I remember my first visits to Australia, and I was amazed how much property was the thing around the barbie. It's always been there, right? And some things don't change. One thing I will highlight: this was called a newspaper, right? So they actually physically printed and distributed this, right, rather than actually it being online. This is the other little foible, right? If you think about it, there will be no future physical record other than the digital record of what's happened in the last 10, 15 years, right? Because all the newspapers have pretty much stopped printing these days. So it's a really interesting observation there. But I do want to underscore what you said, because these construction defects, it's interesting how more and more of the conversation I'm having with property investors and property purchasers are now to do with defects in properties. These defects, I don't think we're getting the full story on just how bad the defects are and how widespread the defects story is. And it's not just old property. It's absolutely the new stuff that's been chucked up recently that is riddled full with bad construction techniques, mistakes, and a whole bunch of other things. And that suggests to me that in the next few years, the quantum of expense that's going to be required to repair and just fix the various issues is going to be way higher than a lot of people think at the moment. And I think a lot of people will be caught out.
Look, I'll give some figures. So, if this development, this apartment in Darling Point that we're assisting our client with, with the renovation, it's a 2-bedroom apartment, 1 bathroom, and it's going to be spec'd up. One of the quotes for the delivery, one of the recent quotes for the delivery of materials, it's got to go up to the second, the second level. Just the delivery of the materials, because the ceilings are going to be dropped. So for the gyprock and the frames, it's $3,000 just for the delivery. So the delivery, that's not the cost of the materials. The cost of the materials is separate. So then our gyprockers, they don't carry the goods in themselves. They actually get the delivery guys to take the goods in. That's an extra service. So that's just $3,000 just to take the goods from the truck up to the unit. 6 months ago, that would have been pricey, but would have been more palatable at $1,000, right? And because we questioned that, that cost, and they gave us a summary of what they're paying now for the drivers, what they're paying the extra hand that's required, and what the charges are per step, because every time each step is an extra dollar, extra $5, and so on, to carry the goods up. So these are the costs, and they're only going to escalate. They're only going to get bigger and bigger. So then you've got these grandiose ideas that the governments have of building, and we go back to, how are you going to build? What are you going to use to build? And who's going to build it? This is why we have the problem, the situation that we have. And now, not only do we have to contend with the issues of the immigration policies, but now, Martin, we've got potentially going to contend with potentially thousands, if not tens of thousands, of Australians, expats, and people with PR, permanent residency, that got the permanent residency, went back to whatever country, coming back to Australia, and they're coming back with a lot of money. This is what I say. At the end of the day, the poor bastards are the first-time buyers that got sliced and diced and thrown under the bus.
Yeah, absolutely. And this contention between the people trying to get on the ladder for the first time and those who are actually able to be facilitated for other reasons to be able to come in further up is a big story. I think we're going to talk about it more. We should just turn to the numbers briefly before we sign off, Edwin. And we'll start in Sydney as normal, of course. Last week on the 2nd, we had 23,306 properties as defined in the Sydney region by domain. And if we jump forward to the 9th, 24,385. So a further rise of properties coming on, not just land, properties. And if we look at the story here, you can see the chart. Well, it speaks for itself, really, doesn't it?
Yeah, it's picking up. It is a lot higher than the last 2 years, even taking into consideration the extra land that had been dumped. But let's see. For the sake of those wanting to get into the market, you would hope that this trend continues the same trajectory. We'll pull back a little bit as we get closer to winter. But the uncertainty is, how are current vendors and future vendors going to react to what the WeChat chatters are saying, that this war is not it's not a 10-day war or a 2-week war, potentially could go into months. And is that going to scare the vendors? Because uncertainty is they're just going to clam up and they're just going to pull their head back in the shell.
Yeah, absolutely. And with, of course, the uncertainty, Rumsfeld's unknown unknowns, we don't know how long it's going to go on for. We don't know whether it's going to escalate further. And of course, there's been recent attacks on desalination plants and other things like that, as well as oil facilities, and even hints of nuclear action. So, this is horrendous. But of course, there are impacts on what people choose to do locally. And one of the things they tend to do, if they've massive uncertainty, is hunker down. So we'll see. With regard to Melbourne, in the Melbourne story, on the 2nd of March, 29,957. And as you said, Edwin, a rise to 31,340 properties listed on the 9th of March. And, well, this is quite a significant uptick, isn't it?
It is, Martin. It is, and this is, in my opinion, has the reverse effect of what when you start pushing investors into a corner, and and you start bringing the policy. So as I said, it's a litmus test of what will happen short term. Whether it's a short term effect, time will tell. But I think this is going to be more like a long term trend, or even medium term trend. It's things. It's not going to get fixed for the next few years, and there you go. You got what you wish for. You got investors pulling out, putting the properties on the market, but nobody, they seem to be growing in numbers. It would then, it's not having the effect that that this, as I said, pushing the investors too hard. It has the opposite effect. So, the mainstream media will catch up to what our thoughts and our views, what we've been talking about for a while, sooner than later. But it's a story that's not really spoken. I raised this 2 years ago when the WeChat chatters were deciding to bail out just over 2 years ago, and but this is the consequence of ad hoc, off the cuff policy.
Absolutely. And again, I'm seeing it in my one to ones, more property investors in the Melbourne area looking for the exit. In Brisbane, as you say, very little supply, strong demand. On the second, 2,889 properties listed. A week later, 2,988, so a very small rise. But in the scheme of things, it's a really, really small number for the size of the Brisbane market.
Yeah, and they're going to struggle. People are going to and and this is what I start looking at things with a little bit more um, interest, and this is what I say to home first home buyers here. Don't don't delay too much that decision, to get it, because if investors refocus, from what they could otherwise buy in Brisbane, if they refocus back into Sydney, um, yeah, there's only, 500, 600 homes for sale in the Sydney region, according to their main, under $1 million, and everything else is, But when you go into even the fringes are going to get absorbed into all that. So, when those markets in your Queensland, in your Western Australia, when they start getting that hot, investors are going to refocus in the Sydney region, and the outskirts of the Sydney region, which then puts more pressure on Sydney buyers.
Absolutely. And just to be clear, when we talk about Brisbane region or Sydney region, Domain casts a pretty broad net as to the region that's encompassed by those labels, right? So this isn't saying just in the city of Brisbane itself. The Brisbane region is a pretty big area, isn't it?
Yeah, it's not as big as REA's region, or Louis Christopher's region. I think Sydney region is more well defined in terms of the how broad it is. But the other property commentators, they even engulf Wollongong as part of the Sydney region.
I know,
So
I
you
know.
don't go that far.
No, exactly. Let's look at the auction statistics just briefly because, last week, of course, we had the Grand Prix and the long weekend. But the auction story is, well, it feels to me, looking at the data and looking at what I'm hearing from people, is that auctions are weakening.
Yeah, and they sort of had a little bit of a bounce back on the eighth week, but now they're coming back again. Uh, the I Look, if his like over the last few years, the trends over the last few years, when there were major global incidents happening over the last 4 or 5 years, we got a retraction in for sale numbers, and we also, people were, because once you've got a retraction in for sale numbers, in specific areas, and in these areas where sale by auction are more prominent, and this is where a lot of people are trying to push the the older generation, the retirees, the boomers, push them out of the bigger homes into a smaller. But when they've got nowhere to go, they'll just stay put, and then that brings a lot, and also when you're trying to break new ceilings, like I've said many times, if you're trying to break new ceilings or new price ceilings, it can be hard at first because it takes a while for people to pallet that they're no longer paying $4 million for the property, but now they've got to pay 4.5 or close on to 5 million. It takes a while. But also added to that, I think it's been our education over the years, Martin, that people have finally cottoned on that the auction sale process does not benefit the purchaser one bit, and it puts a purchaser at a huge disadvantage if you don't know how to do due diligence, within in a matter of days or a week or so, because the time frame, or the marketing time frame, is very short, and a lot of people are still trying to deal with offers not accepted on previous properties, and then it's only a matter of days, a best case scenario, a week to 2 weeks, to start doing due diligence on the next property that they're interested in, and they just can't do it. So therefore, the 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 selling agents provide that information, in which you and I say that information is nothing more than a marketing strategy to make the sales flow a lot easier to benefit their client.
Absolutely. Well, refer people back to the show that I mentioned at the top when I went into the lies and truth about property, when I went into some of this information again, particularly on the clearance rate numbers. On the chart here, you can see here the auction numbers trended from 24 to 25 to 26, and well, it's looking a little bit quiet.
Yeah, in 24, as you can see in the grades, it really stands out. But it's still, early days, for this year. The excitement really happens around spring.
Yeah, absolutely. Well, we'll be watching for that later in the year. And on the rentals, well, just quickly, in Sydney on the 2nd, 8,911 properties listed for rent. Following week, 8,843. So a small fall in the Sydney region. Comparing that with Melbourne, where we had on the 2nd, 9,682, 9,850 a week later. So we're actually seeing the rentals going in a different direction, Sydney versus Melbourne.
Yeah, a little bit, but it's only 200. It's only 200 new listings when you look at those sort of numbers. But when you look at overall, it's dismal. It doesn't move doesn't. It's insignificant when you start looking at your rental vacancy stats. And it's, to me, it's the untold story there is the pain that potential renters are going through.
Absolutely. And I still have seen very, very small numbers of articles in any of the media drilling into this story. For me, this is the big sleeping story in the property sector. It's the stress on the renters. And again, tomorrow I'll go through that in some more detail, because about half of renters have cash flow pressures, and more of them are having to put more of their income in to try and actually find somewhere to live. And the quality of places coming up, not necessarily great, and a lot of pressures with rental increases too. But, this is the same old, same old. Nobody wants to talk about it, particularly politicians. Now, as we come up towards the end of the show, without wanting to be too much in prepper mode, Edwin, a thought about what we should be doing?
Yeah, look, yeah, exactly. We're not telling you to go and buy pallet loads, but I think it'd be prudent to just stock up on your pantry if you can, anywhere else, a bit under the bed. stock up on emergency goods. Those that have got chronic illnesses and rely on constant medication, but that you can't get over the counter or you can get your doctor to give you prescriptions in advance. Particularly when you're like, the sort of stuff that you sometimes when you go abroad for a few months, you're able to get prescriptions in advance. It wouldn't hurt to go and have a chat with a doctor, given what's happening. And I say this more so from the conversations that Dusty's been having with the WeChat chatter groups and what they talk, because they've really got the finger on the pulse in a lot of global trends and global happenings as well as local. And this is where they've convinced me that this so-called 10-day war, 2-week war, is going to potentially you know, uh, move out to push out to months. How many months? Not sure, but so wouldn't hurt to prep up on some emergency goods. Keep some cash handy, and it won't hurt to buy more cans of beans or sardines, whatever you fancy, because it's once oil starts diminishing. Yeah, buy in advance, buy what you would otherwise buy on a weekly basis over a month. Store it up. It wouldn't hurt because you'll also, in my opinion, you'll also save.
Mm.
Because prices aren't going to go down; they're going to continue to go up. And these greedy bastards, once the prices go up, it's painful for them to drop it back down again.
Oh, I think the inflationary pulse that we're going to see is going to be quite significant already, and more coming through. And I want to underscore the cash comment. Remember that, of course, folks, if you are actually in a power down period and you don't have cash, then you can't transact, and that can be a real issue. And I do remind everybody who watching this show that we've been talking for quite some time about the fact that cash is a really good backstop in a time of uncertainty. And so I always, with you, suggest that people hold a certain amount of cash available just in case. It's amazing. I remember the bushfires a few years ago, and for about 2 to 3 weeks, people couldn't actually buy anything other than with cash, and a lot of people had no means of buying anything. So it is worth bearing in mind. Edwin, a very important conversation as always, and we've covered a lot of ground. Thanks very much for all your input there. And I look forward to catching up again next week. Who knows what'll have happened by then, but meantime, keep safe, and I hope you manage to find the fuel you need to get around.
Oh, look, I'm sure we will, and make sure you keep safe. But look, you got to be hopeful. Your flotilla or your armada, whatever they call it there in England, they tell me that they got the diesel engines going, and they're going to join the other big ships in the Gulf. Is that?
Well, except Trump said there's no point; it's too late. We will see. We live in amazingly uncertain times, Edwin. But let's keep a little bit of sense of locality, and the property story still continues. Whatever. Property still is going to be an important part of the conversation around the Barbie, isn't it?
It certainly is. You take care, mate. Look after yourself.
See ya. Take care. Bye
Ciao.
bye.